Hi! Today we welcome to Kyamides MANNY HANNY Dr. Karsten Junius, Chief Economist, Managing Director of J.SAFRA Sarasin, Bank of Switzerland, previously with the IMF. At a time when central banks are reducing interest rates in an effort to boost growth, please notice four important issues that need explaining and will be discussed. How do central banks reconcile quantitative easing with interest rates manipulation? How will central bank digital currencies affect the banking system? Is the fiat currency system here to stay? Is a high debt to GDP ratio important when a large part of the borrowing by the government is internal? The presentation is designed to be for information only and does not constitute invitation to invest. Καλωσορίζουμε σήμερα στο Kyamides MANNY HANNY τον δόκτορα Karsten Junius, επικεφαλή οικονομολόγο και διευθύνων σύμβουλο της J.SAFRA Sarasin, τράπεζα της Ελβετίας που εργάστηκε και στο Διεθνές Νομισματικό Ταμείο. Θα συζητηθούν θέματα όπως πώς δικαιολογούν οι κεντρικές τράπεζες ποσοτική χαλάρωση όταν ανεβάζουν τα επιτόκια, πώς θα επηρεάσει το τραπεζικό σύστημα το ψηφιακό ευρώ όταν περάσει στον έλεγχο της κεντρικής τράπεζας, για πόσο διάστημα ακόμη θα επικρατεί το fiat currency, διαφορά μεταξύ εσωτερικού και εξωτερικού δανεισμού. Η παρουσίαση είναι μόνο για πληροφόρηση και δεν αποτελεί πρόσκληση για επένδυση.
Γεια σας! Today I welcome Karsten Junius, Chief Economist, Managing Director of a famous bank in Switzerland, J.SAFRA Sarasin, and it is a great honor to have him as a guest. The idea is to discuss various financial and banking and economic issues. The idea is not to solicit business for investment. Welcome to Kyamides MANNY HANNY, Karsten. It is a great pleasure to have you as a guest. Especially in a week.
Thank you very much, and yes, to everyone as well.
Especially in a week where our friends, the central banks, have decided to start reducing interest rates because they say, we don't care so much about any inflationary pressures. We are now looking at the growth. We are a bit behind with the growth. You are nicely placed to comment whether this move of the central banks will make a significant difference in the financial world, because of course that's all they do, a central bank. They put up and down the interest rates in addition to doing quantitative easing. So do we think we are now at the appropriate time to reduce interest rates, and would that be, what would be the result in your opinion?
So I absolutely do believe that it's time to reduce interest rates. Inflation has been our dominant problem for quite a while, and has actually affected politics quite a bit. We see this in the US, where everyone is talking about inflation. We see this in Europe, where high inflation was quite a burden for many households. And now I have the impression that we are on the right path towards a target. We are not there yet. That is true. But we also see that labor markets are deteriorating, both in the US as well as in Europe. And I truly think that central banks should have this in mind, and they do. And this is why we see this week, next week, we will see a lot of interest rate cuts in the coming months.
But by how much do you think it will help growth? Is it going to make the standard of living of the average man on the street better? Or is it going to make the rich people richer? How is it going to affect, how do we think it's going to affect the financial markets? What do the speculators think? I mean, as we know, speculators play an important role in up and down fluctuations. That's how they make their money. What about the quantitative easing in trillions that was done by the central banks for the last few years? That didn't create inflation. But that's because presumably the economies were thirsty for liquidity. But then COVID came, factories and production closed down for a few years. That did create inflation because we come back to the O-level economics, too much money chasing too few goods. Obviously, we are going to have inflation. Now COVID is over and we are getting back to normal. Do we really have a danger of inflationary pressures? Is it not strange that now the central banks have decided to reduce rates? Is it because they have realized we never really had inflationary pressures because of quantitative easing? It was because of COVID. Interesting question, isn't it?
Well, I think there were at least 20 interesting questions that you just put out. So let me start with your first one on the standard of living, because I think that is crucial.
Yes.
So here we have two elements actually that influence our standard of living. One is the amount of money that we are taking home.
Yes.
By working or by receiving pensions and payments. And the other, what this money is worth, what we can buy with that amount of money, as inflation might erode that value.
Yes.
So I think central banks, they have now done quite a lot on fighting inflation. So now they are focusing on the returns from labor that we are getting, and of course that we are keeping our jobs or finding new or better ones that are better paying. So if central banks manage the right balance between these two objectives that they kind of all have, then our standard of living is progressing.
Yes.
Obviously, industry and all of us, we have to make the right personal choices. We have to embrace new technologies. We have to embrace productivity enhancing measures and invest accordingly. All this has nothing to do with monetary policy. It's a private sector. It's all of us that have most of the impact on our standard of living. We have to adapt to new circumstances and to new technologies and raise the value of labor output. But central banks are above that and trying to balance inflationary pressure and the need, the investment climate that of course they can enhance, they can make better through lower interest rates. As it's all clear, investments like housing investment in particular are never paid completely with your own capital. You always need some credit from your bank.
Yes. At the same time, we are starting quantitative easing, I think, because reduced growth needs liquidity. Is it not strange that the central banks think still that they are the only ones that can do monetary policy? I say this because after the financial crisis in 2008, Bitcoin started in 2009 and it was led to develop, so everybody saw how blockchain technology can work, and others like Bitcoin followed. But now we see the central banks have awakened to the possibility that they are losing control of monetary policy, so they are now beginning to look at creating central bank digital currencies, euro, dollar, sterling. Now, in this way, already we have digital currencies, but central bank digital currency means they will eventually have absolute control, which is good, no longer haircut on deposits like we had in Cyprus. Eventually it would mean no privacy, but most importantly for banks, if the idea is to transfer the deposits of the commercial banks to the central bank, that means the whole banking system is changing. I mean, a lot of banks will have no deposits from which to lend. Survivors will be the big investment banks that can borrow and lend. The big private banks in Switzerland will lend 60%, say, of what the client gives them. Is this a burning issue in your mind? What's going to happen with the central bank? It could happen in 10 years, it could happen in 6 months if we have a financial crisis perhaps and the government say, no other way, central bank, digital euro or dollar. What do you think? It would be very interesting to hear your views. I'm sure it goes through your mind.
Again, a lot of interesting topics. Thanks for letting me respond to that. First, let's say for our viewers, let's define where we are in this cycle. We have had a lot of quantitative easing, a bit too much for my taste, but since a while, all central banks have been reducing their balance sheets. They are doing this by not extending credit to some long-term credit that was extended to banks have to be paid back right now. And then they are also not maturing or not replacing all the bonds that are maturing on their balance sheets. So that basically means reducing the liquidity that is in the market, that is in the financial sector. So that is a trend that is continuing despite the interest rate cuts that we are getting. So this might get a bit of a confusion as a monetary cycle. On the one hand, central banks are lowering interest rates in order to make financial conditions a bit looser. And on the other hand, they are still reducing the amount of bonds that they are holding, hence reducing liquidity, which should make or should have an upward impulse on bond yields in general. So that is where we stand. Then you rightly said that we had some alternative in new investments like these cryptocurrencies. I think that is fine. For me, that is just an alternative to the currencies that we have, or to gold, like gold is. And some people trust gold as it has been there for thousands of years. I think it's a fascinating asset, by the way. It has been used in all continents of the world, thousands of years ago. And imagine, today we can communicate between Africa and Asia and Europe and America. And we see and can agree that gold has some values. 1,000 years ago, people couldn't, and they still saw always the value of gold.
Yes.
So I think that's fascinating. And then we have people that don't trust the monetary system, they don't trust gold, but they believe in the value of technology and these anonymous assets, like Bitcoin, like Ether, like other cryptocurrencies, and they invest in that. That is fine. But I believe that neither gold nor crypto assets can replace the dollars and euros that we like to have in our pockets. That is what we have, and what many people will like. And honestly, I would rather trust a central bank with all the regulation, with all the legislation that is around and that is determined by our policymakers, than some cryptocurrencies. But that is a personal choice.
Yes.
And let me come to that point with the central bank digital currencies. And here I think you raised a very important question about privacy. Is it as private as the cash that we have? Well, I think that is the main concern that people in Europe have. And there has been this public consultation of the ECB, where everyone in Europe could submit their requests how this digital euro should look like. And you're right. The number one point that citizens had in Europe is keep this as private as cash. So the mandate that the ECB has from this consultation is exactly that. Make it private. Yeah? Don't let governments have a look. Don't let any private players at a look. So from a privacy perspective, and there are all these papers out by the ECB that make it very, very transparent what they are doing. And they have a lot of working groups with Brussels here and there. So it's very transparent what the ECB is aiming for. And what they are doing is clearly to find a technical solution such that the digital Europe is as private as possible, as close to cash as possible. And now what I like actually is that they are making it more private than the digital payment solutions that we currently have. And for me, that is a crucial advantage because we all pay with mostly US American payment providers. And honestly, so far that is fine, and we don't have any problems. But in the end, it's private companies that exploit our payments data.
Yes.
And plus, it is not in our legislation, it is in the US. And who knows whether you mention a time frame of 10 years or so. Who is president of the US at that time, and whether they would require those private payments providers to open up their data to whatever other use. We simply don't know this. So out of privacy concerns, I would be quite happy if all those data remains within Europe and is not spread out to the US or even to China,
yes.
Which is also a possibility.
Yes, you're right. I agree. How about the smaller banks that will lose their deposits, because if once the project is completed, that means the deposits will be with the central bank, and the banks as we know them now, there will be administration vehicles administering the loans and the debit cards. Don't we need to have a serious look at the change in the banking system? There'll still be banks, but a certain type of banks, not the small commercial banks that we know at the moment. Of course, being in Switzerland, being a major and famous bank, it doesn't concern you because you only lend to clients part of what they have with yourselves. But if we take the smaller banks, say Cyprus or Greece, which are smaller banks by any international comparison, I mean, I think very soon the central bank should start explaining that the banking system will be changing and readjust so no panic can come to the people. People will wonder what
to the bankers.
Yeah, because exactly, if you are a small bank and you rely on deposits to lend, and the deposits, people choose to take their deposits, and I don't believe it will be a wallet limited to 2,000 or an amount that each one can have. You cannot do that. Once you decide as a central bank that it will be in effect, you will transfer all the deposits, otherwise it defeats the purpose. So it's something that it's worrying a lot of people who have understood what's going to happen, but it's all for the good of the banking system, shall we say, and for the people. Surely it's not it's not going to worsen the situation of people, but the worrying thing, apart from the central bank digital euro, is what are we going to have again quantitative easing because we are using the fiat system of, we are not backed by gold. It was changed in 1971, not backed by gold. The governments can go and print as much money as they want. The politicians can do that. Do you see are we close to changing the system? Has the fiat currency proven good for the economies and everybody, or do you have good memories of when we had the gold? You are not old enough to have memories, but you know about when Nixon changed the system, no longer backed by gold standard. That means is that, you see it coming soon? Or?
Very, very important questions, I think. And trust me, over here in the banking system, we have been discussing this concern quite frequently. As you just said, it was changed quite dramatically the way we do banking and the existence of banks. And I know that they are also discussing this at the ECB. And here, we all have to ask us, and the ECB or other central banks, they also have to ask us, hey, is there a point in changing the system? Who would actually benefit from changing the system? So should we aim for a different system than the one that we have? And honestly, I don't see a single reason why we should change the system, why a central bank should administer all these savings account and deposits that we have. Do they have? Are they better equipped in dealing with the day-to-day client concerns than we, as a private banker, are? Are they better in assessing any credit or mortgages to clients? Do they really want to do this? And do they want to do this out of Frankfurt? Would they like to do this in the National Central Bank? What kind of advantage would a public bank have over the numerous small and medium-sized banks that have known customer relationships, that know their customer? That is our main advantage. We know our customer. We can assess their credit quality. We can assess what kind of investments they would like to make and which might be too risky or not too risky. That is an absolute advantage of the private sector. And I see no reason why we should change that system. Would be crazy to centralize all this decision-making in central banks.
Yes.
So from what I understood is that at the ECB, they see that in the same way. They don't want to have all these small customers. They don't want to have all these mortgages and credit on their balance sheet. What a disaster it would be to manage this for whole Europe from a centralized point of view. And therefore, they come up with two actually most likely features of this digital euro. The first is non-remuneration. So they are treating this, they are not paying any interest on the digital euro. And well, that basically means you don't have, if you have larger deposits, you don't have any interest in transferring them to your digital euro wallet, because private banks would still pay in interest rates in normal periods. So you would always have an advantage as a private bank to gather these deposits. Well, the second thing is those holding limits for which they find technical solutions that might be quite complex, too complex to discuss now. So they will make sure that they are not getting all these deposits from private clients, simply as they don't want to have them. Yes. And with that, it is like your PayPal account where you deposit maybe 1,000 euros or a few hundred of them just for transaction purposes. Or what I see, they are also working on non-digital or on digital solutions that can be done offline, hence without the internet. So I think that is the area they are working on, rather than revolutionizing the system. I think we are all fine. The banks are fine with the system. The customers are fine with the system right now. And central banks, they also don't have an incentive to abolish fiat money or the two-tier banking system that simply doesn't make sense for anyone. This is why I don't see any major changes, besides that we are using new technological things and making use of technological progress.
Yes. Two last topics I would like to touch, if I may.
Sure.
A country like Switzerland that has its own currency, if it wants to strengthen the currency, it will increase the rates of interest. Assuming everything else is the same, is an important economy, increasing the rates of interest, will it substantially increase the strength of the currency, do you think? Or there are so many other factors to consider? Because you are not a country with exchange control restrictions, in a weak currency where you want to increase the strength of your currency so that you don't die from importing expensive goods. You are a very civilized economy, but would substantial, not substantial, if you are giving, because there are cases in the world where as long as you have a couple of banks which are safe, it doesn't matter if your country is bankrupt. As long as you have the banks, those banks can raise substantially the rate of interest of the local currency and attract many deposits, and in this way put up the strength of your currency. Is that an old-fashioned and derelict method, or?
No, it's exactly how it works over here. So Switzerland is considered as a very safe banking hub. So there's a natural inflow of foreign deposits into Switzerland, especially if there's political turmoil here or there, then people move into the Swiss franc. And usually that is a concern for the Swiss National Bank, as it increases the value of the Swiss franc and thereby makes imports so much cheaper that Switzerland often had to fight against too low inflation rates. So that is our main problem over here, that inflation is too low, too close to zero. In order to prevent that, the Swiss National Bank has lowered interest rates in the past, and I believe they will continue to do so again. Because one thing we can always see, that is that the interest rate differential between the Swiss franc and the US dollar or the euro is also influenced by the differential of interest rates. So lower interest make Swiss francs less attractive and prevent the Swiss franc from appreciating.
Yes. And the last topic, one for the road, as they say, very interesting though. Countries like Japan and USA, their loan to GDP ratio, wow, the opposition politicians always say, oh, you destroy the country, how are we going to repay the loan? But when you look carefully, there is a difference between external borrowing and internal borrowing. I mean, internal borrowing, the majority of borrowing in the States, for instance, is internal borrowing, in dollars, internally. Mm-hmm. It's like borrowing from your own pocket. It's not so important because it's just a bookkeeping entry. If you keep it there for 100 years, or you can simply write it off if you know a good accountant. So why is it, do you think, that it makes so much noise, this issue of loan to GDP ratio, without examining and analyzing how much of that is internal debt and how much is external debt?
Well, thanks for raising this issue. You're absolutely right.
Yes.
And this is probably why we analysts and economists still exist in banks, that we can point out to those differences.
Yes.
And Japan, you rightly said, is most of that is internal borrowing. which means that we shouldn't be that concerned.
Yes.
In the US, it's different. They also have large current account deficits, so they also have a lot of external borrowing.
Yes.
So here we have to be a bit more concerned. Not right now. The stock of debt is
Yes.
absolutely fine for a country of that size and of that power. What we should be a bit concerned about is the flow, meaning the amount of debt that they are adding every year simply because they have budget deficits of 7% of GDP, even in good economic times.
Yes.
And for me, that is a certain concern. Not that they are going bust next year or next 5 years, but the path on which that debt is increasing seems a bit unsustainable in the very long term. And that should also be a concern for the US dollars. So right to point out, internal and external debt really are completely different issues, and we have to distinguish them.
Yes, very good, especially coming from you, who used to be with the International Monetary Fund before joining SAFRA Sarasin. Yes, we could be talking for hours. It's a great pleasure talking to you. Do you have any issues you want to raise? I mean, I hope to see you soon and discuss further issues.
We will have thousands of issues. Our main message in these times is remain resilient, look at your portfolio, advise you with your discuss with your advisors, as there are so many things coming up with the US elections and new policy proposals here and there. We just had the Draghi report. We have the positive effects of lower interest rates. So it will be thrilling times all those coming months.
Yes. Okay. Thank you very much indeed. Ευχαριστώ.
Thank you, Constantine.
Thank you.
Bye-bye.
Bye-bye.